Ever watched a Bollywood epic with plenty of drama, twists, and a family business? Siemens India's stock chart almost qualifies. After a wild demerger, decades of growth, some global controversy, and strong industry play, this is one ticker that's not just moving, but grooving in India's electrified economy. Welcome to today's deep dive, witty, and slightly caffeinated analysis of Siemens India. Grab your popcorn and spreadsheets. Let's decode if this stock is truly electrifying, or just running on borrowed current. The company and its promoters. Siemens India is one of the leading technology and engineering powerhouses in India. Think industrial automation, railways, smart infrared infrastructure, and clean energy. The company's promoter group? Try saying these names in one breath. Siemens AG, Siemens International Holding BV, Siemens Energy AG, and several more cousins from the Siemens Dynasty. Thanks to a landmark 2025 agreement, these groups shape governance, board composition, and even have sets of reserved matters to keep things interesting. A quick history flash. Siemens started in India way back in 1867 when Werner von Siemens himself supervised the first telegraph line from Kolkata to London, a true feat, considering telegraphs don't make for easy WhatsApp texting. 10-year financial analysis. Revenue and profit. The past decade saw impressive compounding and some solid financials. Revenue grew from approximately 16,650 crore rupees a decade ago to over 22,157 crore rupees in 2025, with net income jumping from 1,961 crore rupees in 2023 to 2,717 crore rupees in 2024, and 2,452 crore rupees most recently. Margins. The operating margin stands healthy as of October 2025 at 14.89%. Net profit margins oscillate between 7 to 11%, which is not exactly a dessert, but certainly not a famine. EPS growth. 10-year CAGR of EPS is about 16% with a YoY jump of 38% in 2024. Debt levels. Siemens is as allergic to debt as a cat is to baths, a debt-equity ratio of just 0.01 and negative net debt, meaning they have more cash than they owe. Return on capital employed ranges 16 to 24%. That's solid, high-voltage returns for the sector. Dividend time? Don't party too hard. Payout ratio hovers just approximately 16%, a small extra for loyal shareholders, but most profits seem to be stashed in strategic pockets. Stock chart and technical analysis. Let's stare at numbers until you see patterns that look like the Matrix. From October 2015 to October 2025, Siemens India's stock price danced its way up from around 1,000 rupees to current levels of 3,143 rupees. But not without drama. A recent demerger with Siemens Energy sent the stock plunging 50% following April 2025, before finding support around 2,400 rupees, in true action movie style. Support level. Around 2,401 rupees. Resistance level. 4,148 rupees. Average RSI. Recent, 50, neutral. But last reading is bearish at 44.6. So, no raging party in buying territory. Siemens India stock price 2015-2025 technical indicators. RSI trending below 45 is bearish. MACD, CCI, Williams percent? All say, caution and oversold. Pivot resistance levels currently at 3,153 rupees and 30 paise. Support at 3,040 rupees and 50 paise. Benjamin Graham valuation. Is Siemens India a value investor's dream or priced for perfection poster child? Current price, October 15, 2025, 3,143 rupees, median fair value. About 2,815 rupees, Graham number calculation. With EPS tilde rupee 68 and book value per share tilde rupee 216, Graham number comes somewhere around 1,626 rupees, but the current stock price is nearly double that. P/E ratio. 46. Way above Graham's classic cutoff of 1.5, P/B ratio. 7.2. Graham liked is less than or equal to 1.5. Verdict. Siemens is trading at a premium and is not currently undervalued by the Graham standards. It's a case of strong fundamentals but a bougie price tag, likely due to growth optimism and premium positioning. Pros versus cons. Bull versus bear debate. Bull case, bear case. Decades-long industry leadership, strong promoter support, price at a big premium to intrinsic value, debt-free fortress, healthy margins, robust order book, growth slowing, recent demerger uncertainty, major contracts in railways, energy, manufacturing, recent technical signal, caution, RSI bearish, position to profit from India's infrastructure wave, EPS and book value rising, but outpaced by price surge, high strategic global positioning, volatile stock, major drop post-demerger in 2025, important checks and controversies. The Siemens Group globally has weathered bribery scandals, notably 1999-2006, amounting to over 1.3 billion euros in fines and shake-up of top management. Siemens India took major steps to clean up processes. Post-2007, bids are scrutinized, whistleblowing is encouraged, and the company claims to have built a cartel of the good. As of October 2025, no fresh major scandals have emerged out of India, with proactive compliance and risk controls now root. Siemens in the global market. Siemens India is an essential cog in the global Siemens machine. The parent, Siemens AG, is a tech and engineering superpower in Europe and Asia. Siemens India generates about 77% revenue domestically and 23% abroad, delivering advanced infrastructure, rail, energy and automation offerings. So, it's not just a local player, but a relevant force in emerging markets and new technologies. Conclusion and disclaimer. The final scene. Siemens India is a robust, debt-free, high-margin player enjoying powerful promoter support and diversified sector exposure. Yet, the stock currently trades at a steep premium to classic value investing benchmarks, likely fueled by optimism for India's next decade of infrastructure growth. Decisions to invest? Like all great cinema, that's for you, the discerning audience. Remember, stocks are the original cliffhanger. Consult a financial advisor, triple-check your numbers, and don't treat this video as investment advice, but as entertainment and education for the mind. Disclaimer. This video is for educational purposes only and does not constitute financial advice. Please consult your financial advisor before making investment decisions. All stock investments involve risk, including the possible loss of principal. The creator is not liable for any loss or damages. That's a wrap. Drop your thoughts, subscribe for more market magic, and remember, analysis is sexy, but investing is serious. Stay witty, stay wise.